And it stays internal, so just for us agents only. So good morning, everybody, and for the good of the team here, we're recording this for folks who can't join us tonight. I did text a couple of people earlier, or they texted me that they'll be on, so people, like to procrastinate. So I have, you can't see her face, but I have April Statsny. How do you pronounce that?
Yeah, that was good, Statsny.
Statsny, okay. April was with us, I think in March, and she is she's our marketing person with North American on the life side. So she was on board with us at Zoom, I guess 3 months ago or so, talking about some of the new products and talking about some new IUL that's coming. It's still not approved in California, correct, April?
Right. We have, today I want to talk about this smart money concept, which is with one of our IULs. But yeah, we did another IUL, an enhancement to our builder, and it's called the Builder Plus. And it's not approved in California yet. We're crossing our fingers. California is just a tricky state.
It is. We're very slow. We're usually the last ones to get approved, and sometimes they don't approve it. But anyhow, so okay, so what we're going to do, guys, is April at North American, they have enhanced security issues with their not issues, but security on their system, and they don't have Zoom approved just yet. So we're doing a little bit of a creative hacking here. So what I'm going to do is share my screen, and she's going to share some of her stuff on GoToMeeting. So we don't have to all log on to GoToMeeting. We'll just share my screen, and she's going to share some stuff about, some concepts you guys could be using out in the field with your clients. Because look, right now the economy is crazy. There was just late last night, the China markets dropped about 8% because of something that's going on in Turkey. So imagine that small little country like Turkey, and what's going on over there affected China. And China's freaking out that it could be a snowball effect. And if it affects China, do you think it's going to affect us eventually? Could happen. So there's a lot of nervousness out there, especially in the market. So people are looking for security. And that's where annuity and for the younger generation, life products can work really well. So April wanted to share with us some safe money concepts. And let's get started. I'm getting a little distracted by Sergio. I don't know what you're trying to do, Sergio, but you're scaring me. Are you okay? Okay. April, so what I'm going to do is I'm going to share my screen. And if you guys have any questions, go ahead and chat or interrupt me. And I'm going to share my screen. Can you guys see the North American Smart Money Defined? Yes, thank you, Rocio, for thumbs up. All right, April, you're on. We got your screen, and we're listening to you.
Okay, sounds good. Well, thank you so much, Elvin, and thank you for everyone who's on the line. I appreciate your time. Let's go ahead and dive in. I wanted to talk to you about smart money. This is a concept that I think a lot of people know about already, and if you don't, I'm going to just break it down for you. And we do have a product specific that works with this concept. So what do we mean by the term smart money? Smart money is funds that clients want to retain as both accessible and with limited exposure to loss of value of premium. So these are funds that your clients want to have control over in the event that they may need it. Here's some examples of smart money: annuities, a money market account, a savings account, or there's maybe a recent windfall or inheritance. Now, keep in mind that there may be some penalties or charges in accessing this money early, but they're generally accessible with loss potential of a known limit, right? Now, what we want to talk about is the objectives of the client with money that are in these certain assets. Okay, so the objectives are often that this money is not needed for current income, and it's ultimately going to go to the benefit of the client's heirs. Okay, so the first objective is to maximize the benefit for heirs while retaining control should the client need it, and then also helping to maximize the benefits for their heirs. So they want financial protection during the working years while leveraging assets into a larger estate for later years. Now, just to continue that real quickly is that we also talked about, an objective of retaining access to the funds, whether that's for an emergency or an unexpected need. So it could even be for some future need that may or may not occur, but hasn't yet been identified. So the final objective of this client is competitive returns. The returns could be identified by the return of an eventual benefit for the heirs or potential of accessible cash value or both. Okay, but that is an objective. So here's the solution, right? Life insurance and how we can use North American's Rapid Builder IUL. Of course, the main aspect of life insurance is the death benefit, but another option for the client smart money funds could be this product.
April, we lost you. Let me email her. We lost you, April. She can't see her screen, so I gotta email her. Dang it. Okay. Oh, maybe I can actually say something. Is there a way to chat? April, I can't hear you. Okay, she got it. Okay, what happened there? Sorry, guys. So Rapid Builder IUL is different than Builder IUL, just so you know, they're two different products. So I'm sure she's going to cover that.
Hey, Alvin, you may have to take and cell phone her because if she's trying to do this program, she probably is not paying attention to an email.
Probably. No, she chatted back to me as she hung up. She's trying to call back in. I'll just tell her, use the go-to meeting. April, why don't you use the go-to meeting chat? April. I think she's having trouble with audio altogether, so she's trying to talk into GoToMeeting as well. Yeah, April, we can't hear you either one. So either your headset broke or you just lost your voice. If you call in that number again, use your cell phone to call into that number that I sent you. It has a how do I invite? Oh God. Should I call into this number? I can't. Maybe I could use my cell phone. Okay. I'm gonna try to call this number. But I think we have trouble with your microphone or your headset. Oh God. 4679. 866-899-4679. Call.
Please enter your access code followed by the pound or hash sign. To enable audio controls, please enter your audio PIN followed by the pound or hash sign. If you do not have a PIN, just press pound or hash.
April, are you there?
I'm here.
Okay, can you guys hear her now? Talk.
Can everyone hear me, Alvin, or just you?
I put you on my cell phone so people can hear you now. So for whatever reason, we cannot hear you through the computer.
Okay. Okay. So everyone can hear me so far, and you can see my screen.
Yes, we see the Smart Money video.
Okay. I'm so sorry. I'm not sure what is going on. I will continue on. I'll take a few more minutes. I'm gonna send this link out. It's up here at the top of the screen. This is our micro site at North American, meaning you don't need a username or password to get into this site. And this will give you access to this video that you can email to clients, that you can show clients, that you can embed on your website. In addition, it talks about this smart money sale at the bottom, and then it also has a case study on the right-hand side, a tip sheet for the agents, and a client brochure for your clients. So you may not have heard when I was talking about the smart money concept, but what it is it's for clients who have funds sitting somewhere in an annuity, a savings account, a money market account that is a low yield account. So it's not earning a lot of interest. And the idea is to dump in a single premium into our rapid builder indexed universal life product. And that product also offers a waiver of surrender charge option. So again, the smart money concept being here on the microsite has all of the resources that you need. Here real quickly, I will bring this back up to where I had an example, because this is what typically is you like to see is an example. This is a 55-year-old male a single premium going in of $200,000. I did put the waiver of surrender charge option on this, and we turned that $200,000 into a guaranteed death benefit of $481,000. So that's a pretty good rate of return on their initial one-time only dump in of $200,000. I always run an internal rate of return with every illustration I run. The column to take particular note of is the death benefit IRR and the surrender value IRR. Now, in the short term, the client is mostly concerned about the IRR of the death benefit. Okay, but as we get further along in the policy, the client likely is looking to see if the cash value IRR is competitive or meets his needs. So this illustration is showing a competitive internal rate of return in the first 20 years, ranging from 4.63% to 4.71%. So this is something that at any time, everyone, you guys can run an illustration. I can run an illustration. But if you have any clients that have money sitting somewhere, even if it isn't an annuity, take note, there may be a penalty there. You may have to, if you liquidate that, pay taxes on it. But the ability to put this into the Rapid Builder and turn it into a much higher death benefit, there's a waiver of surrender charge option that you can put on the product. And it is a much higher death benefit, turning that premium leveraging it into a much higher death benefit.
So April, let me ask a quick question. So this kind of looks like a single premium whole life, but it also has surrender of the cash value, right? So is it better than a single premium whole life? I think it is.
Yeah, I would say so. It is, it is a MEC policy, right? It's a modified endowment contract. But that's okay. If the client's money was sitting in an annuity, you take money out of it, you want to pay taxes on that anyways. So it is worth noting the MEC status. However, remember, the main niche for this is clients who have money sitting somewhere in a side account. And when you ask them, what is that money for? Their answer is well, I just want to leave this to my heirs in the most tax efficient, best way possible. This is an idea for them. But yeah, a lot of times this is a single premium. Now it can be additional premium. You can put more premium into it. But yeah, it's a single premium. And I would just say that the opportunity is much greater with this IUL than a single premium whole life product.
So let me add this, April. So this is for all of the agents out there. So we've been, we've been trained in the industry that the best thing about an IUL, Index Universal Life, is that it grows tax-free, potential tax-free income. So what April is referring to when she says that it's a single premium, obviously, is, as I mentioned in the past, and Casey has said that in an IUL, you cannot put a big single premium without violating the MEC, Modified Endowment Contract. So people get scared, a lot of us agents, oh my God, it's going to be violating the MEC. Well, the MEC violation only means now that the client has to pay taxes. That's it. There's nothing scary about the MEC. It just means it now becomes like an annuity, because an annuity, when they take the interest and the principal out, they're paying taxes on it. So by MECing a IUL, it's no different than a CD at a bank, a brokerage account, and an annuity. So don't get scared by MEC, okay? But if the client's goal is to grow, tax-free income, then you make sure you fund it properly over 7 years, 20 years, or something like that. Otherwise, a client can put $100,000 into this type of account. So sorry for interrupting that, April. I just wanted to just dispel that myth.
Yep, that's very good. Exactly. I was going to say the same thing. If you're talking about a sales concept or a sales idea for clients with retirement planning, just like Alvin said, you want to use probably a different product. You want to use the Builder. If you're in any state other than California, you want to use our Builder Plus. But in California, you want to use our Builder. We don't want it to be a MEC policy. And you can see, accessing the client's cash value in the form of variable loans. And you don't want to pay taxes on that, so you don't want to MEC it. In this specific sales concept that I'm talking about today, which is called the smart money concept, this is is okay for this idea for this client, because just like Alvin said, it's not scary. If they want to take out money, then they simply pay taxes on it, just like they would in an annuity. So great point, Alvin. That's all that I have on smart money, Alvin, and using the Rapid Builder. However, I do want to bring back to, we have this, well, I'm going to send out this link to the smart money sale, to this concept. But I do want to mention that North American has a product, and it is called the Legacy Optimizer. And this product is a single premium IUL policy. And this is for, say, a lot of annuity producers who sell annuities. We have a product here at North American, which this is only a single premium. There is no opportunity to put more money into it. It is for clients who are ages 50 to 80. And what it does is it has a premium bonus on it. It has a full return of premium on it. The compensation, if you want to compare it to an annuity, is commission option A is 7.5%. Okay, so that's all the way up to age 80. So for any of the annuity producers out there who are selling annuities, you know that up to, between ages 70 or up to 75, the commission option is 4 or 5%. And once you get over age 75, it drops dramatically. With this Legacy Optimizer, the compensation on it is 7.5%. You have liquidity. We have a 10% free withdrawal, up to 10% of the account value every year. And it also has the chronic illness and the terminal illness on it. So I don't want to confuse you, but if you have any questions, there are two products. This Legacy Optimizer is simplified issue. So you don't have to go through the pyramid blood and urine for this product.
Wow. Okay. That's great. I didn't know. So yeah. for single premium, the Rapid Builder, IUL, or the Legacy Optimizer. And does the Legacy it's a single premium, but it's also, does it almost double for a death benefit, or it just increases for a death benefit?
So, okay, yep, so great question. So if you guys can write down nalegacy.com, so write that down, nalegacy.com. You can come out here and you can go to our quote engine. And so I was just talking to some other agents earlier this morning about coming out here and clicking on the quote engine. And all you need to do is enter in the age. And remember, it's ages 50 to 80 and the premium. So let's say you had $150,000 and you had a 55 male non-tobacco. When I click on generate quote, it will tell you for that 55-year-old, this is what he would have in guaranteed death benefit, $325,000.
And they have a return of premium.
Again, the compensation. Yep, return of premium. Now, the one caveat to that is the return of premium starts in year 5, so you do have to stick with it for a little bit. But we also have that premium bonus, and that starts in year 5 as well. So the premium bonus is 2% per year in years 5, 6, 7, 8, and 9.
Nice. Okay. All right, guys. And this is great because next month is Life Insurance Awareness Month, so that's only 2-3 weeks away.
Absolutely.
All right, great. This is good. Any questions for April here, guys? Anybody?
Yeah, fire away.
Sometimes they're just so overwhelmed with your presence and your knowledge that they get stumped and they don't know what to say.
Alvin, can she explain that premium bonus again, please?
The premium bonus, yes, April. So you said it works after year 5, right? 2%. So basically.
Yeah. Yep.
So explain that again. How does it work? So
yep. Yeah. So let's say you have $100,000, and that was your single premium that you put in. So we have the premium bonus, which is 2% a year in years 5 through 9. So you would get 2% of that $100,000 paid into the client's account value in years 5 through 9.
So that means by year 10, they should have 110,000 more or less
Correct.
on their, and it's got liquidity. So at the minimum, it's gaining, they gain 10% over 10 years, which is not a lot of money, but they've got that death benefit as well.
Right. Yep. Exactly. Yeah. Just going back to, it is an indexed universal life, so it will get credited interest. You will get that premium bonus, but just going back to, remember that the main goal of the sale was, this money is really to leave behind the heirs, and we turn that 150,000 into 325,000.
Gotcha. This is nice. Okay. And it's got the chronic illness acceleration as well as terminal illness, so that's great.
Chronic and terminal. Yep.
Okay, there you go.
Yep, absolutely.
So that's great. Okay, it's NA Legacy. Do you have to go to Engage or NALegacy.com, or what was the website?
Nope. Yep. Yeah. Don't look at mine because it'll get you to the right where I'm at. But all you have to put in is NALegacy.com.
Okay. Perfect. Great. All right. Any questions?
Perfect. Well, yeah, fire away. Any questions? Or I'm sorry again about all the technology, but I can be reached. Alvin can be reached. Would love to run some illustrations or talk about any questions offline.
I do know that there's a few agents out, especially the ones in San Diego. I don't know if they're here, but they're starting to write some North American apps, IULs. They're still doing the paper app, and I know some people are shifting over to IGO. Is that what you guys recommend that, or what do you think agents are doing out there as far as writing apps? Are they still?
Yeah, good question. Yeah, so with this legacy optimizer, everyone, this is going to be best if you do an e-app, our electronic application, which is within the IGO system. So the idea here is that you submit this online, and then what happens is you have a 20-minute call with an underwriter. So you basically, as the agent, you fill out the application online. You have the client call the phone number to an underwriter, and they have a 15 to 20-minute call. And at the end of that call, the client hands the phone back to the agent, and the decision is made. You're approved or not approved. So, yeah, we definitely recommend, especially for the legacy optimizers, to do the e-app. The other thing I'll tell you is doing North American's e-app, which is called Simple Submit. North American's e-app is Simple Submit. For any of our products that you submit on the electronic app, we have our right-of-way process, and that is non-fluid underwriting. So anyone ages 18 to 50 who you go on and do the e-app, they're going to ask you 2 pre-qualifying questions, and if the client answers no to those pre-qualifying questions, then they're going to go through the underwriting process without fluid. No pyramid, no blood, no urine.
Is this for term as well? Term and permanent?
Yep, every one of our products. Now, obviously, it's not this product because this product is ages 50 to 80. But every one of our other products has opportunity to go through non-fluid. And again, I mean, the legacy optimizer is a simplified issue. So either way, there's no fluid.
Gotcha. Okay, you guys just don't like fluids, huh?
We want to help the clients out. So many clients would rather it that way.
Yeah, too much fluids hanging around all over. All righty. Great. All righty. So any questions, guys? Just want to throw it out there while we got April here. If not, I think all of that was self-explanatory, April. There's nothing confusing about what you did. So that's great. With that.
Okay, good. Well, let me know in the future. And again, my apologies for the technology.
You got it. No, what I'll do, if you have an email of the, I know you sent me an email months ago. Maybe I just need to resend it again about the agent microsite and any other marketing materials you might have. Because it is, if you want to dump the kitchen sink at me and I can forward it to the agents, no problem, because whatever you got as far as marketing materials, I'll forward it out to them so that they can use, because next month is an important month for life insurance.
Absolutely.
Okay, cool. All right, April, well, we'll wrap it up here. We got other stuff to cover. All right, thank you. So let's thank April.
Bye-bye.
Bye-bye. Everybody's saying, wow, they give you a big high five. Thank you.
Well, good. Good.
Okay, bye-bye. All right, guys, so that was cool. Good information. What I want to do is talk a few minutes, if you guys bear with me here, about Medicare. So some of you don't do Medicare, but that's okay. I want you to understand what Medicare is. Some of you do Medicare, and this could be a little bit of a recap, and also maybe just you'll learn something, pick up something. So Medicare season's coming up, and a lot of you agents, whether you do Medicare or not, you're going to be hearing a lot of buzz about Medicare because open enrollment season is coming about. That's between October 17th and December 2nd. Is that right, Glenn? Something like that? It's like a month and a half. Glenn knows everything. So
it's October 15th through December 7th.
Okay, we got my numbers wrong. Okay, the 15th to the 7th. So it's about a 2.5, almost a 2-month period, I'm sorry. And it's kind of similar to, Cover California, the open enrollment period. So you're kind of hearing 2 different open enrollment periods. But you're going to see a lot of agents, a lot of agencies, a lot of groups out there pushing open enrollment in Medicare. So if you're interested in learning Medicare or you want to get your Medicare certification, there is a process to do that. Today I'm going to send out an email because a couple of you are interested in getting your AHIP certification. So I do have this. I'll show it to you right now. Let me see. I'm going to send this out. For those of you that have not gotten your AHIP certification for 2015, I'm going to send this little, how do I get this? There's basically AHIP explanation. Glenn, can you, or I see Angie's here. I'm hearing rumors. I haven't done my AHIP certification, so I gotta give myself a little spanking here. So is it now 2 modules for the returning agents? Is it modules 4 and 5 now, or what is it? What's happening?
Yeah, if you're already certified, you only have to do modules 4 and 5.
4 and 5. Wow, that's pretty cool. So for any new agents, you've got to do modules 1 through 5. And what that means, guys, this is a federal national exam, if you will. And again, if you're brand new and you've never taken AHIP before, you've got to register. And I have here a 3-page explanation of how to register. You're basically going through HealthNet because they give a little discount. And whether you write for HealthNet or not, that's okay. This has an entire explanation about how to get AHIP certified. So I'm going to send this out again. So for those returning agents, I got an email from like Michael this weekend. And yes, what I want to do is next Monday at 1 o'clock, here at the strategic office in South Pasadena, next Monday, I'm going to be having a crash course. So for those of you that need to take the test, you have to pass with 90% or more. So if you try it yourself and you don't pass, because they give you 3 strikes and you're out. So if you don't pass it on the first time and you want to come here and do a little crash course and we'll pass it together, be here between Monday 1 to 4. Okay, and we'll take the test together and we'll do a little crash coursing. So I'll send out some information about that. But if you pass it on your own, you don't need to come in on Monday afternoon. And so that's a little bit about that. What I do want to talk about the rest of you, just to know about Medicare, because you may, 1, you want to know your industry, you want to understand Medicare. 2, if for whatever reason you have a client that you come across during the season, they say, hey, they might come to Rocio and say, Rocio, do you do Medicare? Jorge, do you do Medicare? And you're like, no, I don't do Medicare, but I know enough. And I'll refer you to one of our colleagues to do Medicare. So that's why I want to talk a little bit about Medicare. So what is Medicare? It is basically, in a nutshell, it's health insurance for seniors 65 and older, and sometimes people under 65 who are permanently disabled. They've been disabled for 2 years with SSDI, Social Security Disability Insurance, for 2 years straight, and they now qualify for Medicare. So what I want to talk a little bit about that is kind of explain that process. So I was going to go and go jump right into this part, but I want to reverse engineer it. The best way I've been telling clients is explain it backwards. A lot of agents, we explain A, B, C, D, and everything. We finally get, and the client's all confused. What I'm trying to do now more, and it makes it easier for the clients, is to explain that there's two basic types of Medicare plans out there. One of them is called Medicare Advantage, and the other is called Medicare Supplement. So when your seniors, your parents, or your grandparents are getting mail, they're getting a stack of mail, they're going to get a whole bunch of it. I normally tell my seniors, throw away that mail. It makes no sense. That's why you got me. I'll explain it for you. So again, it comes into two categories, Advantage or Supplement. So Advantage is basically an HMO. It is an HMO. And what do I mean by that is if somebody signs up for an Advantage plan, they're in a network of doctors, usually by county and by a doctor's IPA, or Independent Physicians Agreement Association, excuse me. So what does that mean? That means that person has to be part of that network. If they decide to go outside of the network to another doctor in another county, another state, they may have to pay out-of-network expenses. So that's how they're able to control costs, and but again, they're agreeing to be part of a network. And because they're an HMO, the costs are dramatically reduced. In fact, here in LA County, it's pretty much zero for almost all the stuff. You do have some copays, small little copays for ambulance, for some outpatient care, for some special needs, but we're talking $50, $100, nothing to the maximum. The thing that Medicare was designed for is to keep seniors from becoming broke and going homeless and falling into poverty. So it was designed in such a way that it really has maximums, very low in costs. So let me kind of explain, now that you understand Medicare Advantage, the second option to that is Medicare Supplement. Medicare Supplement, there's no like which is better than the other. Supplement, in my opinion, is great for that person who travels a lot. They're going to different states. They have the financial means to pay extra because it will cost more. And they have a lot of specialists, and they need to pick doctors in different areas. So they have specialists in their heart specialists, their lung specialists, and they got 4 or 5 specialists, and they cannot find all those doctors in the same network. So that may be a really important need for them to have a supplement plan. So what I normally tell my clients is if you want supplement, it's because you travel a lot, you have different specialists, and you can afford it. And if it is, it's the Cadillac. If you can get a supplement, you've got the Cadillac, okay? If there's any questions, please put in the chat box, or anything you want to add to what I'm saying, it's confusing or whatever, please do. So now we know.
Alvin?
Yes, sir.
Yeah, just make sure that when you have a supplement, you also have to have a prescription drug card, which is additional cost on top of the supplement.
Yep. So that's kind of, so like when I reverse engineer my presentation, I'm talking about the plans, and now I'm going to tell you how to get to those plans. So again, the client will say, well, you know what, I like both. Tell me more. So I go, well, first off, now let's talk about how you qualify for that. You got to turn 65. So when someone turns 65 for your normal seniors, they're eligible for Medicare. Doesn't mean they need to sign up for Medicare or sign up for Part B, because they might have coverage at work. So let's say their company is paying 100% of their health insurance coverage. They got the platinum plan, and the client pays nothing. So there's probably no need for them to go to Medicare. There are some seniors of mine that have that kind of a situation where they actually pay some. So instead of paying $0, they're paying $200 a month, and their deductibles are $2,000 or something. So at that point, I tell them, look, even though you have coverage at work, you're probably going to save money by shifting to Medicare. And let me explain to you how. And so that's another conversation to have folks that are 65 and older, just to mention to them that, hey, even though you have good coverage at work, you may want to consider switching to Medicare because you can probably save money. Plus, the company will save money by no longer having that senior covered in their health plan. So that's a great opportunity for those that have Medicare to start talking to large companies with a lot of employees and tell their HR person, hey, it's great that you pay for coverage for your seniors, but once they turn 65, introduce them to me. And I can probably get them off the company health plan, reduce your payments, and get them into a better plan. So that's one thing. So do they have to switch into Medicare? And if they say, you know what, it's more expensive being on my company plan, or my company is kicking me off my plan and I've got to switch to Medicare, that's when seniors are confused. They're like, what do I do? Oh my God, how does this work? So like Glenn was saying, there's really 3 letters that you need to know about when it comes to Medicare. Part A, Part B, and Part D. There's another letter called, it's C, but that one is, C actually means, I tell folks it means combo or the Advantage plan. Think of C as combo. Advantage is a combination plan. It includes A, B, and D. So C is kind of like a combination of all those plus their plan. Again, C, think of it as combo, okay? So it's not really a plan, so you got A, B, and D. Okay, I'm losing everybody's pictures. I don't know if that's Zoom or people are, okay, so you got A, B, and D. And so like Glenn says, that if they get supplement, they gotta pay for D. And they gotta pay for supplement. Okay, now A is automatic. It covers the doctor's building. And this is what I tell my seniors. I go, look, because you've been working for 10 years or your spouse has been working for 10 years, you're automatically covered for A. And A means the hospital. So I go, great, you got the hospital, but if you show up to the hospital, no one's gonna take care of you. The doctors are not gonna see you. The nurses are not gonna attend you. You're not gonna get any blood work, any x-ray exams, because you also need Part B. So Part B, you need to sign up for if you're choosing to do it at age 65 or later. So when you sign up for Part B, you actually have to go to the Social Security website or Social Security office. So right here, I actually prepared something for my clients. It's probably a little too detailed and it's a little older, but I explained to them how to sign up for Medicare for the first time. And I really explained how to do Part B in it. And then I explained how to go into the website, and I explained the Part D premium. It's all based on income. So if someone earned less than $85,000 a year as an individual or $170,000 as a couple, their premium is going to be about $132 a month for Part B. So they actually have to pay something. So is the government covering everything? No, you've got to pay $132 a month. However, people are Medicare, Medi-Cal, the government, if they're full Medicare, Medi-Cal, the government will help pay for Part B and the Part D coverage. So this little chart that you see right here basically shows how much they will be paying based on their income 2 years ago. So if I've had some clients that made $300,000 or more, and their Part B, they'll say, Alvin, you told me that the Part B is $134 a month. I said, it's $134 a month for most people. If your income is higher, it's going to be more, and because they're being charged a lot more on their Part B coverage. So I have this little thing. I'm going to send it to you guys. It's a little outdated so that you can read it and use it. And basically, I tell folks, once you get your Part B signed up for, you're going to get your Medicare card. It's the red, white, and blue card. And once you have your Part A and Part B on your Medicare card, come see me and we'll pick a plan for you. And I'll go over what a supplement plan is, an Advantage plan is, and we'll pick a plan together. So the message going out to a lot of you who've never done Medicare before, and they're turning 65, and it's 3 months before they turn 65 and they're confused, you want to ask them, do you have your Medicare card yet? Your red, white, and blue card. Before you get that, all that mail that you're getting, don't worry about it. I'll introduce you to a colleague of mine that can explain all that to you. But most important is get your red, white, and blue Medicare card, and you have to sign up for Part B. And once the client,
Alvin?
yes, sir.
Can I interrupt you there for a second?
Absolutely.
Personally, I find it's much better if when somebody's getting close to age 65, you have a meeting with them right away. Don't wait for them to get that card. Start talking to them because they're going to get inundated with letters and stuff. And even some companies are breaking the law and calling. But I find that I'm much more successful if I get people before they sign up for that card, because they don't always understand what they have to do to get that card. So, you know, become that proactive agent before they get their AB card.
Well, you're absolutely right. And I was referring to other agents that are not Medicare certified, and they'll be introducing them to me, or say, get your card and go see Alvin, go see Glenn, go see, you know, Michael, go see Sergio. So definitely, you're right. Absolutely right. Most of my clients, it's amazing. They have no clue what to do. They're lost because they're, like you said, they're inundated with so much information and so much mail. They'll figure it out. Most of them have figured it out, but by kind of like just, you know, no one really told them. They just kind of figured it out to get their Part B. And but they really don't understand that entire process that they went through. Because I would talk to a client a year or two later that has Medicare, and I say, well, how did you get started? They're like, I don't know. I don't recall what I did, but I got my coverage. And some of them make it through, but you're right, they're confused. So yes, normally most of my clients that I meet with, they don't have their Medicare card, so I'm giving them instructions. That's why I give them this document here. And I send them off, and I call them back in 2-3 weeks and say, hey, did you get your Medicare card? Come on in.
Okay, Alvin, one more reason why I do that is that there's that above 20, below 20 rule for Medicare. So if you work for a company and you have less than 20 employees, Medicare is primary. If you have more than 20, Medicare can be secondary. But if you're under 20, you have to sign up for Part B. And a lot of people don't realize that. They've heard that if I got insurance, I can stay with my company insurance, but it's not true. Right.
So, and the HR people should know that as well, but you're right. Sometimes they don't, because they're just working there. So there are a lot of rules when it comes to Medicare. So basically, for you guys that are not doing Medicare, I just wanted to kind of give you a little bit about what it is, and so that you can refer them to one of us, and we'll take care of them. It's taken us years to kind of understand it. So imagine a senior that's turning 65, getting a stack of mail. I'm literally a stack of mail, getting phone calls like Glenn said, getting invited to these luncheons and these pie giveaways and all that stuff. People are confused. So they're going to go with somebody they trust. So you can refer somebody or talk to them before they get all this mail or while they're getting it, and they trust you, they're going to come see you. There's a couple of other things that I do have here. Is I have this, I made this little cheat sheet for agents use only. I made this years ago, and I don't know if you guys can see it. Let me see if I can. It just has a little checklist of the things you need to do, because if you're doing a Medicare Advantage presentation, there are secret shoppers out there making sure you do what's right. And I do have a cheat sheet here of everything you should be doing and saying and covering in your presentation. I also found something from HealthNet, a sales appointment checklist. So this one's more detailed, but it really covers. So if you're going to go into an appointment, you probably want to read this to ground yourself and make sure you're covering all these different things. So it does have a great little checklist of all the things you need to cover. And, you know, as just to be on the safe side, you know, we might want to like cover all these and then have your client sign it at the end. So that way you know you covered all these, because there's been once in a blue moon you'll get a client that wants to file a complaint. Rarely happens, but I know there's some agents out there who've gotten complaints but have been able to successfully defend themselves because they've taken good notes.
Alvin, I'm one of those people that got a complaint filed against them because another agent was trying to take my client away, and they can't change until open enrollment. So the agent convinces them to file a complaint against you because you didn't fully explain something. So I use that checklist so that they come back and say, you know what, you didn't explain this to me. I want out. Then you're in trouble with the company. So you have that checklist. I had that checklist, and I got a letter saying no problem.
Wow. Wow. That's crazy. Okay. So
There's
I'm
a
going to
lot
send.
of unethical agents out there who will try to take your business away.
There is. There is. And you just got to watch your back. And, you know, sometimes seniors don't understand. They hear one thing, they see, they don't fully understand. They don't fully basically remember. I mean, can you remember what somebody said to you last week? Some of you are going to forget what I said, you know, and by lunchtime, you'll forget this meeting, forget everything that April said. So anyhow, but yeah, thank you for sharing that, Glenn. So this is a great little checklist, and it also helps you making sure you make that presentation. So that's Medicare. Now, if you are already AHIP certified, there is the group that I'm working with now called Team M&M Excelsior. They're a new FMO in the area, and they're having I guess, certifications this coming Wednesday in Downey with different carriers. I don't think I'll be able to make it, but I'm going to send out the email to those that are AHIP certified and would like to be a part of Excelsior. And if you're not sure, let me know. If you're not happy with your current FMO, let me know. It's Excelsior is a national organization. They're one of the largest individual health insurance broker nationally, and here in California, their marketing company is Health Markets. So you've probably heard of Health Markets. That's Excelsior, and now they're branching out into Medicare, and they're going to be investing millions into that. And they've got a back office that's going to be amazing. They are new in California, so they're stumbling right now. They're not perfect, but I just know in a year from now, a couple of years from now, they're going to be a major force, and they're going to be taking on like the AGAs of the world and the others. I've already seen some of the stuff that they've gotten. They've got some pretty impressive quoters, back office, and so forth. So if you're interested in learning more about Excelsior and Team M&M, let me know, and I'll be sending information about their certification soon. Next Monday, I'll be doing the crash course for AHIP certification. So so that's that. Any questions on Medicare? Now let me finish this part. If you have your life and health license, you can sell Medicare supplement without taking your AHIP exam. So your AHIP exam is only for Medicare Advantage Part C, which is the HMO. But today, if you have your life and health, you can sell Medicare supplement to a senior that wants supplement. And if they want that Cadillac, you can offer it, and I'll teach you how to do that as well if you want to do that, or you can refer it to one of us agents. There is a little bit of a learning curve, but it's nowhere near what you need to do for Advantage. Now, financially, it doesn't pay a whole lot. You know, for every new enrollment that you get the first year, the first time they're in the Medicare system, I think it's $540, $550 now. I think it's gone up a little bit. So if you do 2 enrollments per month, that's an extra $1,100 a month. And then starting year 2, you're earning $260 per year, or about $23 a month. So imagine having 100 clients. That's $2,300 a month coming in. So, and I know there's some agents out there that are getting at least $1,000 a month from Medicare business that they wrote 5 years ago. So if that's something you want to get as residual income, Medicare is a great option for you. Working with doctors' offices to get Medicare client referrals is probably one of the best guaranteed, well, not guaranteed, but secure way of getting leads. But I'm a big fan of turning 65. So when clients are turning 65, they're lost. You're there to be the navigator and to teach them, and they'll remain loyal to you for a long, long time. So if you're interested in learning how to build your Medicare business, and it is a lot of work, but I gotta tell you, it's worth it. I love it when seniors leave my office and they feel like, oh my God, somebody taught me something and I feel better now. And that's always a great thing. Plus, you know, there might be another potential sale there with the Legacy Optimizer. we're starting to hear about a lot of seniors who sold their home and they're downsizing. They've got an extra $200,000 sitting in the bank. They don't know what to do with it. And if they're going to leave it to their heirs, you got the legacy optimizer. You've got the, what is that, the rapid builder. It could be an option. So it's return of premium. So they're not losing that money, but they don't need that money right now. So those are good options for that. So other than that, any questions for me, guys? Because we're wrapping up at the hour here. Seeing none, I will. I'm going to be here all week, just plugging away at work and really focusing on some clients now. And there's been a lot of changes going on, so I'm trying to keep abreast of all these changes in addition to stuff. There's some. Rocio, are you still here? And I think she logged off. Rocio is working in a special project. She's not here. She's going to be doing supplemental plans in the county of Los Angeles. So where she's going to be sitting down with county employees and signing them up in a special supplement plan. It's not Aflac, it's not Colonial, it's a new one coming to California, and we're one of the first agencies in California to take on this plan, and it's because of Rocio. She's a rock star when it comes to supplemental plans in the county. These are like your accident plans and so forth. Before she came to Strategic, she was doing this, and she got her. Now she wants to go back to that because it is residual income as well. So she'll be our representative. So if some of you want to go and have that time and that flexibility to wake up at 7 in the morning, be in the Valley at 5 o'clock, be in South Central at 3, and you've got the flexibility to move basically 5 days a week and you move around, then I want to be part of her team, let me know and let her know, and we'll tell you what it entails. But you've got to be really flexible and you've got to be willing to be coachable, but you're going to basically be sitting down with employees and signing them up. And it's a really attractive plan because unlike Aflac, unlike Colonial, this plan has all of its products are return of premium. So that means that the employee doesn't use the benefits, they get all their premiums back. So it's the only product of its kind in the county, so they know it's going to take off. So that's why she's pretty excited about doing this. So didn't get a chance to have her talk a little bit about it, but maybe next week we'll do that. All right, guys, have a great one. Enjoy the week. I'm here if you need anything, and take care. And I'm glad you were on board today. And again, call me if you have any questions, okay? Take care. Bye-bye. I don't know how to end this meeting. What do I do? There we go. Stop sharing. All right, guys, have a wonderful one. I'll post this on Facebook. Bye-bye.